Hello YouTube, welcome to Winning Streak. If you don't know about this YouTube channel, if you're new, I am following this one market provided by deriv.com. I'm not affiliated with deriv.com. It's a broker, it's an offshore broker. I am based in Africa. To be specific, I am in South Africa, and I've been trading this market for about 5 years. And in this video, and these are the kind of lessons that I wish someone like a mentor would have instilled in me as a new student of the game. Well, number one on the list, it is journaling. Okay, as you can see on my chart here, I have the Step Index daily journal entry. And I'm basically talking about what is happening currently on Step Index, but on a daily time frame. I'm on the TradingView platform on the website, which does not allow me to go above the daily time frame. So if it had a weekly time frame and a monthly time frame, I would have those respective journal entries. Like this, it would say if I was on a weekly time frame, Step Index weekly journal entry, and I would journal each week what is happening based on the weekly time frame and its respective key levels. But since we are on a daily time frame, I am doing a daily journal entry based off of what the market is doing. Even though I am a swing trader at heart, I still journal my trades, or I just journal the market based on the price action that is happening on the market on a daily basis. Okay, on a daily basis. If you want to get good at something, it doesn't matter what it is. If it's trading, gym life, whatever it is that you aspire to be good at, you have to do it on a daily basis. Otherwise, you're going to waste your time. I've wasted about 3 years of my trading career just trading based off of emotions. Sometimes I would follow a strategy and I would go into a losing streak, as we normally go into a losing streak, and from there I would stop journaling. That's one mistake that I did in my trading career. I deeply regret not journaling my trades. As I said, if you want to get good at something, you need to practice each and every day. You have to make it a daily habit. Make time for your journal entries. If not, as I said, you're going to waste your time. Journal every day what happens into the marketplace. So this is how I go about journaling my trades or whatever that I'm looking at into the market. This is how I go about it. Okay. So on the October 2025, the month end, this is October, and going forward, it is the new month of November. So looking back into the month end consolidation, and in my journal here, it says that the month end consolidation wasn't able to get above this daily CB or daily fair value gap. It wasn't able to get above there. If you remember back in the month end consolidation for October's commentary, I was looking for this particular high and this particular high as a means of an objective. But you can clearly see here that we weren't able to get above this daily CB. And this has alerted me of a market bearish tone. Okay, If the market is struggling to get above a specific PD array at a specific time, like the month end, it is basically telling me that there is something going on inside of that market period. So essentially what I discovered is that the month end consolidation, it tends to be a choppy market, okay? It is a consolidation. Hence why I say that it is the month end consolidation. It is very tricky to trade, okay? I've had difficulty in producing the month end topic for October's commentary. I had difficulty in navigating the market within this consolidation. So in the opening of November, I was still looking for the relative equal highs here. That was the episode 1 for November. I was looking for essentially these highs. I saw them as buy side liquidity, but you can clearly see that the November opening, I saw a lot of converging PD arrays. What those PD arrays are, it is essentially liquidity. Liquidity is another form of a price delivery array, okay? So here is the 1st of November. You can clearly see that we take out the month-end consolidation lows, yes, but also we take out the 30th of October 2025 month-end high. It's inside of that daily fair value gap, yes. We spool higher, we trade higher, and we take out that particular high. But if you look closely, we have printed the candlestick bodies inside of the daily CB fair value gap consequent enrichment. This is indicative of a market that is bearish. It is telling you, even though I took out the 30th of October 2025 month end high, I have traded outside of the fair value gap here. This is indicative of, this is simply the opening of November. It tends to do that. It tends to be a little bit aggressive in the opening. So if you're looking at a fair value gap in the opening of each month, just expect that we're going to have these little bit of mohawk in price action. It is the opening. It tends to be a little bit aggressive. Okay. So we have that mohawk and the daily CB consequent enrichment is holding price. As you can see, it is being respected. That is a confirmation for a bearish tone in the marketplace. If you look back at the converging PD arrays, which are liquidity based, the month end consolidation, you can clearly see that even though we purged the 27th of October 2025 low, which is essentially encapsulating the month end lows, even though we took out that month end low, we are still relative towards the month end consolidation. Another key PD array that we are still close to around the opening, it is the Friday 17th of October 2025 mid-month low. The mid-month low of October, we are close to that particular key level. So that tells me that down here we have relative equal lows and we have respected the daily key level, moving away from this particular CB. Okay, so we moved away. We had the month-end consolidation. We opened, and if we look back through the opening, we have left relative equal lows down here. The daily CB, which is now a resistance, clearly you can see the candlestick bodies have respected the daily CB itself. So my confirmation for a bearish bias was seen with the Wednesday's 5th of November's price action. It was a large range. It moved a lot. It moved a lot. And it broke and closed below the opening of November. This is a market structure shift, good people. If we sweep out a low and we print a fair value gap, that is a market structure shift. So we had a large range expansion, okay? And we printed relative equal lows on the 8th of November relative to the mid-month of October. So down here we have printed and engineered liquidity. So this is where the market wants to go, right? It leaves the mid-month low of October as it is. It leaves it as it is and it goes up and rebalances the fair value gap here. It rebalances the fair value gap. If price is trading inside of a fair value gap and it goes into the high and it fills in that fair value gap hole, we are not trying to trade the fair value gap on its own based on price coming back into the fair value gap to rebalance it. As soon as price trades inside of a fair value gap, we don't trade the market. We wait for certain time when the market is easy for you to trade or to follow along, okay? If you are a fan of trading inefficiencies on step index, well, my take is that since I've seen the market do this a lot of times, step index tends to fill in its inefficiencies. And especially if we are experiencing a consolidation market like this, look at this inefficiency here. It's been filled whole. It's been filled whole here. Even this one, we filled it whole in the opening of November. This one as well, you can clearly see it. We filled the inefficiency whole. So how is it possible for you to trade these inefficiencies, my guy? Well, I look at a certain time when the market will respect the inefficiencies. Well, we create a new sell side liquidity pool on the 12th of November and we quickly retrace into that. Where is the high of mid-month? It is at the daily fair value gap, consequent enrichment. Notice that I said the mid-month high. This is the reason why I am making this video on a mid-month of November. We are essentially trading all the way up into the daily fair value gap consequent enrichment, the 50% of this large range expansion. What is the importance of this large range expansion? Well, that large range expansion, it is the opening fair value gap of November. Each new month has a fair value gap. Okay, each new month has a fair value gap, and that inefficiency can be used to formulate a bias. We are either trading away from that imbalance or we are trading back to it. Whichever way you can find a bias and the narrative towards that inefficiency, or we either move away from it. So I see that we have respected the daily fair value gap consequent enrichment. So clearly, we are just printing the mid-month high of November, and you can clearly see that the upper half of that inefficiency is being respected here. We don't want to see price action go above this particular upper half. This here at the consequent enrichment is enough. So we displace lower. We move away from the fair value gap itself. So we are using this fair value gap to formulate a bias. We are moving away from the inefficiency itself. Where is the liquidity? We have this wick here. We can split that wick in half, and the consequent enrichment of this wick would be my target. Or I can target the Friday 17th of October 2025 mid-month low of October. I can do that. I can target this particular low. It's still salient, good people. It's still important. So how did we deliver from the daily fair value gap high all the way down into the relative equal lows here? How did we do that? Well, I've written down here that my bearish bias was confirmed by a large range expansion lower on the November 5th. This was the large range expansion, right? And we printed the relative equal lows. So the large range imbalance was rebalanced. Notice that I have it in capital letters. Step index tends to rebalance its inefficiencies, good people. So it did that on a new trading week, Sunday. Well, Sunday opens a new trading week. So when we opened a new trading week on Sunday, on the 9th, we opened here. We traded higher. We filled in the inefficiency itself on Sunday. Monday, we create high of the week. When we begin a new trading week, Step index tends to explode. It tends to move quickly. So here it is. It opens, trades lower, and it goes up higher to fill in the inefficiency. So on Monday, we have a bearish profile. This profile is being shown by Monday creating the high of the week, meaning that it swept the 9th of November high, it swept it, and then it closed inside of the daily fair value gap high. These are the little things that I am annotating in my chart, good people. I do this and I annotate it, okay? I write down what is important on the chart at the moment, and I do that on a daily basis. This is a way for me to engage price action and and understand what is happening on the markets at that current moment, or to foresee the possible future. Okay, if you do this on a daily basis, you're going to get better and better and better at reading price, and it's going to become more easy for you to understand what is going to happen next. Okay, so as soon as I saw that we have that daily fair value gap high being respected, I then annotated here that we have a bearish profile on Monday 10th. We swept the 9th of November, boop, we closed down here inside of the daily fair value gap high. We then had this market structure shift down here, okay? We closed below these relative equal lows. That is a market structure shift, good people, right? So we return in the mid-month inside of that daily fair value gap consequent enrichment. That, good people, is what I've been up to in Step Index, just looking at price action and journaling it on a daily basis. You can just look at specific times of the month where you have time sensitive key levels, okay, like this daily consequent enrichment. We're going to see on the lower time frames how this particular high was created, right? I saw a comment on one of my subscribers. They were essentially asking about the time zones, or to be specific, the sessions that are suitable to trade step index. Well, in my opinion, I treat step index, or rather, I treat the synthetic indices markets the very same way that I trade the real world markets. Okay, I believe that whoever designed the synthetic indices markets, they were employing the very same code that runs the markets on a real time. Okay, there are some things that they changed a little bit, but essentially it is the very same code, good people. All right, so let's get into it. Let me show you what you can do with liquidity and time. Step index on a 1 minute time frame. Wow, man, you really dialed it down to the 1 minute time frame. Oh my goodness. Wow, 1 minute time frame. Okay, let's get into it. Well, here is the London opening. It opens at 8 o'clock in my local time. Well, since I know that we're going to have a quarrel about the time zones, let us switch our time zone to New York. New York -5 UTC here. That's the one, right? So the London session, we know that it opens at 1 o'clock New York local time, right? This delineation here denotes the new trading day. This is the new trading day. It opened and it's been one directional going up. Where is it going? If you recall, we have the daily fair value gap low, the daily fair value gap consequent enroachment. This is the 50%, and the daily fair value gap high. And here we have the daily 9th of November's high, which was taken. This is what this maroon horizontal line is indicating. Okay, so here we are on the mid-month of November. So I'm going to walk you through each session of the day, what you can do with a particular trading model. Okay, so here it is on the 1 minute time frame. We are trading at the consequent enroachment of the daily time frame key level. Even though I am on the 1 minute time frame, I know exactly where we are in terms of price action. Okay, I am not getting lost in the lower time frames. I know a lot of people say that the lower time frames is just noise. Well, to me, it's not. I know exactly what I'm looking for. So here we are on the daily time frame, consequent enroachment fair value gap, right? The 50%. And we arrive there at the consequent enroachment of the daily fair value gap. In which session? We arrive there in the London session. The London session, it is the most highly volatile session in synthetic indices. Why do I say that? Well, if you recall in my previous videos, I kept on mentioning that the new trading day, or the new trading week, or the new trading month, or the new trading year tends to be volatile. It tends to print a lot of volatility. So what can you do with that information? Well, if you're looking at a daily range, okay, if you're looking at a daily range, then within the first few sessions of the day, like the London session, you anticipate the market to be in expansion. You don't expect it to consolidate, okay? So if the new trading day is hop over here. If the new trading day has been expanding, you can clearly see how it's been trending higher. It reaches a key level on the daily time frame, a resistance. In this resistance, you're expecting price to hold and go lower in support of your bearish bias. Okay, so here we are in the London session. We expect this particular London session to be explosive, good people. Okay, so how do you find an entry mechanism within synthetic indices? Well, we have the London opening at 1 o'clock, New York local time. Switch your time zone to New York, good people. 1 o'clock, we have the London session open. At 1:30 in real-time markets, this particular time at 1:30, we have an opening range of London. And that opening range, it closes at 2 o'clock. So within the opening range, you are looking for specific things to happen in order for you to open a trading position. Okay, if you've already arrived at a bias on the daily time frame, you expect price action to be bearish. All right, when you get into the lower time frames, this is what you're looking for. Here is buy side liquidity. You can clearly see this high is relative to this particular high, right? So they are relative towards each other. Price action explodes higher. Notice that we don't have a market structure shift yet. Price has been printing higher and higher and higher. But as soon as we hit the London opening range, which is essentially 30 minutes, it spikes into the buy side liquidity pools and it displaces lower. It creates a market structure shift, meaning that it closes below this particular low with speed. Okay, that is your market structure shift, good people. It has displacement, it is moving quickly. Okay, so within this London opening range, you are looking for the buy side liquidity pool to be taken, and you expect a fair value gap in return. So we make a Judas fake move to the upside, taking out liquidity, and we displace lower. That is what you're looking for as a means of an entry, good people. All right, so here is your fair value gap within the opening range of London. You want to place your short position inside of the fair value gap. It is better if price action does not fill in the fair value gap itself. It is better. Well, my guy, you missed this particular fair value gap here. We have a fair value gap. It's tiny. Why don't you draw that one? Because this one, the reason why I don't draw it is it does not create a market structure shift. The market structure shift is here within this particular low. This one is just a fair value gap. But this one, it creates a market structure shift. So a lot of importance with this one. If you're going to place your entry mechanism, your entry at this particular fair value gap, price may not come into that fair value gap. Okay, it's real simple. Price may not come into that fair value gap. Why? Because it does not have a market structure shift. It doesn't hold water. I would expect this fair value gap to remain open. And here it is. It remains open, right? We trade inside of the fair value gap here, and here, and here, and here. So we have a lot of opportunities in London session to take our winning position. Okay, so this is the London session trade that you could have done. Since we expect this particular London session to be explosive, well, this is what price action did. And around 5 o'clock, this is the London session close. London session, or basically each session, is 5 hours. If I'm not mistaken, it's 5 hours or 6 hours. So here we have the 5 o'clock hour. Okay, this 5 o'clock hour, we have this particular time where we call it the London lunch. From 5 o'clock all the way up into 6 o'clock, we have price action retracing. Okay, if you're trading the London session, by 5 o'clock, you are out of your position. Why? Because the London lunch may retrace against you. Okay, it may retrace against you. So at this particular time, at 6 o'clock, just an hour after the London session has closed, we have the New York opening here at 6 o'clock. New York opening right here. And at this particular time, the 7 o'clock right here, 7 o'clock, it begins the New York range. Okay, it begins the New York opening range. So from 7 o'clock to 7:30, you are looking for a fair value gap. You're basically looking for the same thing that I just showed in the London session. You are looking for buy side liquidity to be taken and followed by a fair value gap. Okay, what does that look like? Well, good people, this is what it looks like. We have the buy side liquidity pool of the New York session opening here, and within the New York opening range, which is essentially 30 minutes. Here is 7 o'clock with this vertical delineation, and the New York closing opening range here at 7:30. You can clearly see that it is New York opening time, good people. You are looking for the very same thing to occur. This is the buy side liquidity pool right here, the New York opening. And if you recall, we have the daily fair value gap low, the daily fair value gap consequent enroachment, and the daily fair value gap high. Within these three key PD arrays, these are specific key levels, good people. They are not a zone. They are not a zone. They are specific. So within these particular time sessions, you are looking for either of the key PD arrays. The three key levels can be traded within each key zone. Okay, within each key time, you can trade each key level. I hope that makes sense. Okay, so we have the buy side liquidity pool here. We sweep the buy side liquidity pool. Notice that price action was in a consolidation. Since the New York session opened, it was in a consolidation, right? And then here comes the New York opening range. It moves higher into the buy side liquidity pool, clears out all of these smooth equal highs. Boop, 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 everybody's out. Within this opening range, you're looking for a fair value gap. Where's your fair value gap? Here. At 7:30 on the dot, you have a market structure shift. We break below this particular low. We trade up to hit the consequent enroachment of the fair value gap. We hit it perfectly on the tick, good people. And we displace lower. Right? Where is your sell side liquidity pool? Your sell side liquidity pool is the London lunch. These are the London lunch lows. That's your liquidity. You take profit at the London lows. Here is the London low. We hit it perfectly. We are still in the New York session open, right? So price does what? It retraces all the way up to take out the opening range highs. Okay, we take all of that out. We are now at the New York lunch. Okay, so at the New York lunch, we are still at that particular daily fair value gap low. We are still on that key PD array on the higher time frame. So here is the New York lunch, right? This particular time at 11 o'clock. Remember that the New York session, it started at 6 o'clock New York time. It ends at 11 o'clock. This is the New York session AM. All right, AM. Okay, so at 11 o'clock, you are out of your positions of this particular New York. All right, so here comes the New York lunch. Any trend that has been in the marketplace for that particular day will change during the New York lunch. Whatever the trend has been for the day can change during the New York lunch. If price has been in consolidation for the rest of the day, when it comes to this New York lunch from 11 o'clock all the way up to 12 o'clock, anything can change, good people. Anything can change. But here we are witnessing the daily fair value gap low holding price. Okay, so we are applying the very same model. We have the buy side liquidity pool being taken, followed by a market structure shift with a displacement. We return back into the fair value gap itself. And if you notice, we are hitting the daily fair value gap low right here. This is a high resistance on the higher time frame. We hit that higher time frame low key PD array, and we are also visiting the fair value gap here. Do we visit the fair value gap upper quadrants, meaning that on this fair value gap, does price action has the willingness to visit the upper half of the inefficiency itself? No, it doesn't, right? That tells you that price action is what? It is bearish, extremely bearish, right? So we hit our key PD array and look at the response. It displaces lower. So as we go on into the day, we have the PM session. PM session starts at 1 o'clock. 1 o'clock in the New York session, right? PM session, it starts here 1 o'clock, and within 30 minutes into the PM session open, we have the PM session opening range. Okay, so it's 30 minutes as well. From 1:30 to 2 o'clock, you are looking for a fair value gap in the direction of your daily buyers, right? Notice that price action does not take out the PM session high, right? So it has created a lower high formation, right? And in that lower high formation, it displaces lower here. It prints this particular low here relative to this inefficiency here, right? It goes up, it takes out this buy side liquidity pool here at 31 minutes past 1 o'clock. This is the buy sell liquidity pool that is taken. It trades into this inefficiency, but this inefficiency, it is out of the opening range. You wait, good people, you wait for an inefficiency within this opening range. There's your fair value gap right here, right? So you trade into the fair value gap here multiple times, and we displace lower, attacking this particular low, and that is it. You are done for the day, right? This is how I trade, good people. I look at specific key times of the day, and I look at a certain buys for the day. That is it. This is how I trade synthetic indices. I so wish that someone had installed these key times of the day to just look at a specific market at a specific time of the day. And I am looking for the things that I showed you in this particular video. I'm looking for the buy side liquidity pool to be taken, followed by a fair value gap in the direction of my buyers. And I'm looking for price action to trade inside of that fair value gap within an opening range. That is it, good people. All right, this is what I'm doing. So hopefully you find some insight on this video, particularly that gentleman who had asked me about session trading in synthetic indices. I hope I answered your question very well, my guy. So until then, I will see you guys on the next video. Toodles.